Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, good morning. How are you, Judd? Let me start with you. How are you?
I'm doing great. Doing great.
Great to see you.
Enjoying the weather and looking forward to a beautiful time of year.
Absolutely. Me too. Stuart, how are you today?
Oh man, I'm exhausted, but having a great time doing it. You know, it's the response has obviously been just overwhelming, and
I know.
we've had a great time kind of doing all of the planning. The message at the end of last year was unbelievable. People really understood that change is upon us.
Sure.
And there's some real importance in making a plan.
Sure, absolutely. Because I know, obviously, since we started doing the shows together, you were busy before we started the shows. Now your business has gone to a whole different level because you're so passionate about helping people retire comfortably and with a plan. So let me ask you, with the current economy where we are right now, how important is it to have a plan in place, Judd?
Well, I mean, I think you definitely want to be making sure that you have your ducks in a row. Okay. And for some people, whether or not that's, 3 months, 3 years, 10 years out, you really want to make sure that as we saw over the last year or so, things can change quickly.
Sure.
And because of that, you want to have a plan in place to start, so when life throws one of these hiccups at us, that you have a direction you can go.
That makes sense. Stewart, what about the market right now? What's going on with just the general market, if you will?
We're within a point or two of the highest peak in market history. I think a lot of people sometimes get lost in the fact that, hey, we've had this amazing market that's gone on for a long time without only one major hiccup, during the initial COVID drop of last year. We have a graphic that will kind of show you where we are in the market today. This is a chart of the S&P 500, and I think what I want to show you in this chart is basically where we are today there on the right. We are at the highest peak basically in market history. And what we're seeing right now is we're starting to see a lot of people that are getting overconfident in their stock picking skills, right? Because, let's take a look from 2009 until today. I mean, we've had this 12-year market run. And with all due respect to these individual stock pickers, the reality is that a blind chicken could have picked good stocks for the last 12 years, right? And so towards the end of these markets, it's like what we saw in 99, it's what we saw in 2007. People start getting this false sense of confidence that, hey, I can do better than they can. And just remember, it's not about how much you make on the way up, it's about how much you don't lose on the way down. The key to wealth is just about preserving your wealth, to make sure that you don't lose everything that that you gained. And we'll flash back to the graphic one more time. And if you take a look at the graphic from 2000 to 2013, the S&P ended up in the same place, right? So, when you're working, people just don't care very much because you've got another 10 or 20 or 30 years of work left. But what about when you're retired? Right? You can't go back to earn that money again. And sure. I think the reality is that what we're starting to do is see people that are a little, too comfortable with these amazing markets.
Sure. And we've talked about this in the past. Obviously, history repeats itself. So what's going to happen again is there will be a correction. Correct, Judd?
Yeah, there's always going to be, the markets are very cyclical. And so that's one of the things that people tend to not pay attention to. Sure. When things are dropping and it's all over the news, then people are definitely aware of it. But over time, they have a short memory. And what tends to happen again is usually once every 5 years, we're going to get some form of a correction. So a drop of 10% or more in the market. And we're at a spot right now where we've pretty much gone 13 years without having any sustained corrections. And so because of that, you have to be aware and know that something's going to come.
Sure, absolutely. Stewart, why is it important to work with a fiduciary, especially when we're talking about times like this?
Well, first of all, you really do want to know that the person you're working with has your best interests at heart. And, it's my opinion that if you're not dealing with a true fiduciary, you need to rethink that position. Now, quite honestly, there's a lot of really good brokers out there. Some of the big box shops out there, the guys are really good. And the gals, they're really well intended. But at the end of the day, you want to make sure that the payment that they're getting, that the advisor is getting paid from fees, not from any sort of backdoor, hidden commissions inside the underlying securities. We see tons of these products out there that have just tons and tons of hidden fees. And like I was talking about the market earlier, you can hide those kind of fees in this amazing market, right? When the market's quadrupled over the last 12 years, you can hide a couple % of fees. No one notices. But what about that, when it goes from like 1999 or 2000 all the way to 2013 with none of the gains, you go add 2 or 3 or 4% in fees on there, all of a sudden you're down 30 to 50% over that period of time. So it just makes sense to really be fee conscious, make sure that your advisor's a fiduciary. The fiduciary standard is a minimum standard. It is absolutely, and it's funny because a lot of the brokers now are saying that they're fiduciaries. There's a difference between the fiduciary standard and being a fiduciary, and quite honestly, it's just important to know the difference.
Judd, do you have anything to add to Stewart's comments?
Yeah, I think just to kind of hop on his coattails there, when most people believe that if you go to a financial advisor, they are going to work in your best interest, that they're going to do what's best for you overall. And not that doesn't always happen, and we don't mean that just because someone happens to be a broker-dealer that they're not trying to do well for you as a client. But again, the big box brokers that are out there, they are truly a broker-dealer, or what's a broker-dealer relationship. And what that does is it means in the small print of your statements, you're going to see that what they've got is, all the small print letting you know that they're there to benefit you, but their allegiance is to their firm or the broker first and to the client second. And as Stewart touched on, with us being the fiduciary as a minimum standard, we have to put the client's interest first. We have to be completely transparent in everything that we do on their behalf.
Thank you, Judd. Stewart, this is the perfect time for us to open up the phone lines to the viewers at home. Can you tell them what they can expect to receive by calling in today?
Sure, absolutely. So if you call 833-652-7829, what we're going to offer to the first 10 callers is a complimentary portfolio review. And in that review, what we're going to do is we're going to take a look at those fees I talked about earlier. We're going to also look at the risks. Are you over allocated to risk towards the end of this market here? And we're also going to let you know if we believe that your advisor is a fiduciary. And that's very clear in the statements and in our analysis. And all you have to do is call 833-652-7829. We'd be glad to take a look and give you a second opinion on what you have.
Stewart, thank you so much. Judd, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. It never hurts to get a second opinion on what you currently have in place. Is it the right plan for you? Let Stewart and Judd take a look. Again, the number to call is 833-652-7829. We'll be right back after this very short commercial break.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination rain on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Insurance Services. Gentlemen, a great show that we're having today. Obviously talking about the economy. The market may shift again, how to be prepared for that. Most importantly, working with a fiduciary, why that is so important. But let me ask you a question, Stewart. I'm going to guide this directly to you. Why is asset preservation and tax retirement different than anyone else?
Well, I think what makes us different is that we are a whole shop. We're a holistic shop. And what I mean by that is that not only do we do the estate planning side, we've been dealing with the same attorney for 15 years doing all of the estate planning for our clients. We also have a tax office built into our office. And listen, tax season is crazy. I mean, we are going to do around 700 tax returns this year. And I mean, these are long days. The reason for our tax office is not about preparing taxes. It's about planning for taxes. And so what makes us different is that we look at the full picture. And if your advisor isn't looking at your taxes, it's a problem, right? Everybody knows that taxes are changing as we're speaking. And the question is, what kind of plan do you have in place to adapt for those changes? And most frequently, what we hear from clients is that when they try to talk to their advisors about tax, you know, the advisor says, hey, go talk to your tax person. Well, then when they talk to the tax person, they say, hey, you know what, maybe you should talk to your financial advisor about that. And so the right hand doesn't know what the left hand's doing, and that conversation never happens. So what we do at Asset Preservation is bring that conversation full circle. We're able to have those tax professionals. We have enrolled agents and CPAs and CFPs that we have access to at our company. So we can do a complete plan at our company, unlike most firms.
Stewart, thank you so much. Judd, let me ask you, what are the steps in the process involved as someone becomes a client? What does that look like?
Well, again, for most folks, it's going to be coming in and taking advantage of one of our complimentary portfolio reviews. We want to be able to sit down, see where your situation is. Some people just need a little bit of guidance. Some people need a lot of help. They come in with nothing in place. So generally, it's going to be sitting down 2 or 3 times to see where they're at, to see what changes need to be addressed. And then at that point, we get there, and if they choose that they want to work with us, and if they're a good fit for what we do, then they would become a client at that time.
Okay.
And again, we're really just interviewing up until that point. So there's no cost or fee associated with that. Again, it's about finding out where they're at, what they need, and, you know, are we a fit to do that for them?
So again, designing a plan that's going to suit their needs, because it's not cookie cutter, not one size fits all, right, Stewart?
Yeah, absolutely. I mean, everybody's situation is absolutely different. What I would say is that a cookie cutter approach just doesn't work when it comes to a plan. And at Asset Preservation, what's important to us is to look at all of the options on the table. You know, we, you know, at the end of last year, I mean, I was working December 31st until, you know, 4 or 5 o'clock when all the financial companies were closing, and we're getting in Roth conversions, we're doing all this tax planning, but it's really important to adapt to those kind of changes. And I think for, you know, for our clients, I think they really appreciate the fact that we don't let any stone be unturned. You know? Absolutely.
Judd, after the complimentary review, if you will, what does it cost to work with you?
Well, so there again, the way we do things, as I mentioned, you're going to sit down, we do the consultation. That might actually end up being meeting once or twice before we get to that point. The cost we charge as a fiduciary, again, we charge you on what it is that we're managing, what we're in charge of. Doesn't mean we won't give some advice here and there, but you're only going to pay a fee based on what we handle. And again, as a fiduciary, it's very transparent. You know exactly what we get paid, and the better you do, the better we do.
That makes sense. Well, Judd, this is the perfect time for us to go ahead and open up the phone lines. I know we have a lot to cover in our next third segment of the show, so let's go ahead and take the phone callers right now. What do you think?
Yeah, absolutely. Well, give us a call at 833-652-7829. Stewart and I would love to sit down with you at our office, get a chance again to cover these topics that we've touched on, take a look at your portfolio, see what kind of fees are inside there, see what kind of tax ramifications you have going on. If you're someone who's looking at retiring, and again, whether that's 3 months, 3 years, we can sit down and help you map that out and see what that looks like. And then, of course, make sure that you're not taking too much risk overall in that portfolio. But again, it's your time. We want to provide you some value. And again, we're hoping that we're interviewing for that future financial job down the road for you. So 833-652-7829.
Judd, thank you so much. Stewart, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. We have a whole lot more coming up on our next segment. We're going to talk about taxes in the horizon. What does that look like? So you don't want to go away. Again, 833-652-7829. We'll be right back after this very short commercial break.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson, who are the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having today, and I think this last segment people are going to be so interested in. We're going to talk about tax changes and what's in the horizon. Stewart, can I throw that right at you?
Absolutely. So I think most people realize that, things are changing, right? But from a tax perspective, a political perspective, et cetera. But let's just focus on taxes right now. So whether you love Trump or hate Trump, don't care, okay? What's important to understand is you put all the politics aside and realize, what does the environment look like that we're in right now? Well, we are in the most efficient tax window in history for most Americans right now. And we understand that taxes are changing. Now, there's a couple changes being, talked about with regard to the tax rates, about the Trump tax cuts being basically wiped out. And we have to, assume that a lot of things that are said in political campaigns are just, jibber jabber, right? It's people that are jockeying for position. And then once they come into office, they actually have to put all those things into play, right? To hold everything true. So if you are getting rid of the Trump tax cuts. That's going to affect people at most brackets, not just the wealthy. But we do know that the proposal right now is that the highest tax bracket actually be raised from 37% to 39.7%. So we know that we're expecting some pretty massive tax increases. We're also expecting changes within the treatment of capital gains. And what I mean by that is that when you own an asset that appreciates in value, so let's say you buy a stock, you buy Microsoft and you pay $100 for it, it becomes worth $200. Well, if you've had it for more than a year, you're going to pay a capital gains rate on that. If you have, around $400,000 or below in total income, you're going to pay about 15% long-term capital gains. If you have more than that, you're going to pay a 20% capital gains. Well, one of the changes that's upon us is that the new administration wants to increase the capital gains rate from that highest of 20% to the highest ordinary income bracket of 37.9. It's a problem, right? So what we saw at the end of last year was a ton of people that were in a rush basically to liquidate capital assets, real estate, et cetera, and here in Phoenix, we are just killing it in the real estate market right now. So people have all these long-term properties, these stocks, and we're seeing a rush out the doors to sell because not only is there not very much inventory on the market, people are able to get top dollar for some of their properties now. So a lot of people want to realize those gains this year rather than wait until what may or may not change, next year. Now, it's entirely possible, Cynthia, that those taxes are retroactive to this year. That's why we're, pretty hesitant to make any major planning changes until we see a real plan on paper.
That makes sense.
But I think it's important to make sure that you're locked and loaded and ready to go with a plan in place. We know tax rates are not going down from where they are today, so it's really important that you have a plan, that you have a financial plan, and if your advisor is not doing a tax plan for you, then you really should give us a call. And once again, all you have to do is call 833-652-7829. We'd be glad to take a look at any of the appreciated capital assets you have, any stocks, any funds that you have concerns about. And just remember, we're in this massive discounted window right now, and that's going away. Yeah. So it's really important to make a plan.
To plan just in case. I mean, we kind of know what the projection is going to be, but we can't say that for sure, but just to know what that would be is perfect. Thank you, Stewart. Judd, anything you want to add on to what Stewart was mentioning?
Well, yeah, so he was talking about the long-term capital gains on those appreciated assets. One of the other items that they're talked about changing or modifying would be the step up in basis.
Okay.
And so kind of back to Stewart's example with that stock, if you bought it for $100, it's now worth $200. The way the current law stands is if you were to pass away, your family would inherit that stock at the $200 value today.
Okay.
And they're talking about wanting to either get rid of that altogether, the step up, or make people pay the taxes along the way as those assets appreciate, whether or not they actually sell them or not. So I was born in Iowa, lived there for a number of years, moved out here to Arizona, have grown up here. But when you look at like family farms and things like that, I mean, the ebb and flow of the weather and everything else that goes on, there's tough years as it is.
Sure.
And if you're now going to make that family have to pay taxes on that appreciation, whether either at the end when it's moving from one generation to the next, or when each year if they're taxing them because it happened to go up in value, that's going to be devastating.
Yeah.
These aren't the Rockefellers and the JP Morgans that you're going after with this stuff. These are average Americans who this is their livelihood. So, a lot of it for us again comes back to don't just do tax preparation, do tax planning.
Yeah, absolutely.
Look at what's changed from last year to this year. Look at what's happening going forward. And as Stewart alluded to, and as we tend to talk about, taxes can impact your pensions, your Social Security, when you have RMDs. There's so many other pieces that go into it. And, those who don't have a plan are the ones who are going to pay the most taxes.
That makes sense. And Stuart, we've talked about this in the past, that people often think that when they hit the retirement years that their taxes will go down, but that's not necessarily the case.
Well, what we're seeing is that even if they stop working, oftentimes their income is just as high, because what we see is that a lot of people put all this money tax deferred into these 401k plans, right? And they're told, hey, your income is going to be lower in retirement. But what they don't think through is, even if their tax rate is lower per se, what they're not considering is the way that Social Security is taxed, right? For some people, a lot of couples, you're going to see up to $1.5 million of benefit over their lifetime if they live to a normal mortality of, 82 to 85. Well, for some people, $1.5 million is their total net worth, or it may be double their liquid net worth, right? Well, for those people that don't consider planning Social Security, it's a big, big mistake. We used to do these great workshops and seminars on Social Security planning, and that really is important to us, to make sure that people create an efficient model. Because remember, at the end of the day, it's not about what you make, it's about what you keep. And if you can take that $1.5 million of potential income flow out of the taxable bracket, that'd be pretty nice. Just remember, when Social Security started, it was never meant to be taxed. But in 1983, believe it or not, it was Ronald Reagan that made it taxable for the first time, and then Bill Clinton made it way more taxable. And it's important to consider that stuff.
Sure.
If you don't want to pay tax on what may be one of your biggest assets or income streams, if you don't plan for that, it's a huge mistake. But the reality is that at the end of the day, advisors do the least amount of work necessary to get paid. They love golfing. And listen, I love golfing. I love doing that stuff. But the reality is we're working long days, 6 days, 7 days a week sometimes, because we want to make sure that we have a complete plan in place. And listen, it's a lot of work to do tax planning. But you know what? Your advisor's making fees, they're making a living off of your investments. You need to get some value for that. And quite honestly, all you need to do is get off that couch and give us a call. We'd be glad to give you a second opinion.
Let's talk a little bit about locations. Judd, can we talk about locations for just a couple minutes, please?
Yeah, absolutely. So what we've been trying to do, obviously, as we've grown, certainly expanded our reach through the TV show here, having multiple locations to be able to service people has become a big deal. So we've got our longtime headquarters in the West Valley. That's in the Peoria, Sun City area. We've got some great areas out there with Portobello Country Club and Westbrook Village. We have our other location. Our second one is over in Scottsdale, Scottsdale Road and Shea, and then opening up, this year in 2021 is our Tempe location.
Oh,
so
wow.
We're trying to provide, as Stewart talked about, that holistic planning where we've got the big picture for everybody, and we've got the locations out there to be able to serve you.
And I love the fact that, again, that you spend so much quality time with each client that comes in. Everyone always says that you give them the gift of listening. You're hearing what they're saying, and that's such a testimonial to both of you. Thank you again for another amazing show this week. I can't believe we're almost out of time. I can't wait to see you guys next week. To the viewers at home, thank you so much for watching and spending time with us. The number to call is 833-652-7829. You're calling in for a complimentary portfolio review, a second opinion, what you currently have in place. All you have to do is pick up the phone and call. Again, be safe, be happy, be blessed, and we'll see you back next week.